Hello my students, this is my second video about basic accountancy. In my last video, we had discussed about the assets, what are current asset, what are fixed asset or non-current asset. Today, we will discuss one more thing. If you don't see my previous video, I will share the link below so you can watch my previous video about the assets. Now, the second main heads of accounting is liabilities. Liabilities are the obligations of business which are to be paid to outsiders. When we purchase anything or we owed to someone any amount, anything, it will be called liabilities in accounting. Liabilities are also of two types. The first one is current liabilities. Current liabilities, very simple, like current assets. Which becomes due within 1 year. For example, the most common liability is accounts payable and some government or legal documents, note payable or bill payable. In my previous lecture, we had discussed about the revenue. Revenue means the amount which is to be collected from the business. Now, business mainly we had discussed business is of three types. Number one, trading business. Number two, non-trading or service business. Number third, manufacturing business. In service business, if we receive any amount in advance from our customers for which we have to provide service in the future, it will be called unearned income. But if any customer paid any amount to us in advance for any goods, it will be called advance from customers. Advance from customers for merchandising business, unearned income for service business. One more thing. When we took very short term loan, most probably for a week, for a month, not more than that, it will be called bank overdraft, which we withdraw from the bank by our check. It is called bank overdraft. In short form, it is called as bank OD. Bank OD is a short-term loan which we get from the bank, and bank only provides this loan to only those customers who are very valuable for the bank, who are very huge amount customers for the bank, and any type of expense payable, etc. All these items are called current liabilities, which we have to pay within 1 year. The next head of account about the liability. The second one is non-current or fixed liabilities. Which becomes due after 1 year. For example, all types of long-term loans, bonds, or in British terminology, debentures payable, or mortgage payable. What is mortgage payable? When we get any amount as a loan from any bank or any other financial institution, we have to submit property documents or any other valuable, normally property documents, to get loan. It will be called as to mortgage our property, and the amount which we have to pay will be called mortgage payable. And now the third head of account is called capital or proprietorship. What is capital? The claim of owner या owners towards the assets of business. For example, in case of sole proprietorship, there will be only a single owner, Mr. A. But in case of partnership, as many partners, as many capitals. Capital B, capital C, etc. But in case of company, which is called corporation by American terminologies, it will be called shares capital or capital stock. Now we are moving towards our fourth head of account. The fourth head of account is called revenues. In simple words, the collections towards normal course of business. For example, in case of merchandising business, the collection will be from the sales. Doctors, lawyers, engineers, professors collect fees, we call fees income. Some people works on commission basis. Therefore, their income is known as commission income. Some people like laundry business, they will earn service income. Some very highly qualified personnel, they provide services and as a consultant, their income is called consulting fee income, etc. And the last head of account is expense. Those expenditures which are born. It does not mean to give birth. Born, the past tense of bear, are born to run the business. For example, I have a shop on rent. Rent expense. I have many employees who work for me for salary. Salaries expense. I have to pay utility bills. Tangible fixed assets are subject to depreciate, a kind of non-cash expense. Depreciation expense. If there is a business, there is a risk, and for the risk we have insurance expense. I provide goods to some customers on credit, but they did not pay me back. Bad debt expense. I use stationery items in my business to keep a record. Office supplies expense. Etc. So now, in today's lecture, we have just completed the 5 basic concepts of accounting, which are, I'm going through it, assets, liabilities, capital, revenue, and expenses. The whole accounting is based on these 5 main accounts. Accounting is very easy. I am repeating it again and again. I will continue from this lecture, from this chapter. This is called the first chapter in next class. Till then, Allah Hafiz.